On Too Sharp with ET, today we have first India's capital markets just delivered a record-breaking fundraising year. But the latest quarterly earnings, they reveal a grim picture. Second, India's reworking its oil sourcing strategy, turning back to West Asia as Russian discounts fade and US tariff pressure builds on us. Let's get started. On the markets, the main theme is that record fundraising meets the earnings reality. So FY25 was a landmark year for India's capital markets. SEBI's annual report says that the company has raised 14.6 lakh crore rupees in total, both equity as well as debt combined, the highest ever that we have seen. Now, public equity fundraising that surged more than 2.5 times to 2.1 lakh crore rupees over the last year. IPO activity that broke records with 320 listings compared to 272 in FY24. Main board IPOs alone saw 79 companies raise 1.6 lakh crores, more than double of last year around 61,000 crores. SME listings set a new high with 241 companies raising over 9,800 crores. SEBI credits this resilience to strong domestic investor participation, also stable policy and supportive fiscal and monetary stances. But the June quarter earnings season that tells a different story. At least 141 companies across sectors reported simultaneous declines in both their sales as well as profit figures year on year. Here are some of the numbers. In auto sector, for example, Tata Motors profits dropped 31%, Hyundai Motor India down 8%, Sona BLW declined 14%. Consumer durables. Colgate dropped 12%, Havells fell 15%, and PSU faced the challenges to remember, with Coal India down 21% and NTBC down 32%. In private, Adani Enterprises profit plummeted over 40%, and also remembered on the other companies like Dam Capital Advisors, PSP Projects were down 99%, Bajaj Electricals, Praj Industries down 94%. This weak earnings picture has really fed into the global sentiment. Bank of America's latest fund manager survey shows that India has fallen from the most favored Asian market to the latest least favored in just 3 months. Now, 30% of the managers are now underweight India, citing Trump's 50% tariffs, expensive valuations, and also slowing earnings momentum. India is now preparing to lean more on West Asian oil suppliers like Saudi Arabia, UAE, as well as Iraq, as US pressure really mounts over us on our purchases of Russian crude. Now, for decades, remember, West Asia was India's main oil source, and that changed after 2022 when Russia locked out of the European markets and also began offering deep discounts. Now, Russia's share of India's oil imports jumped from just 2.5% to more than a third in this period. Now, those discounts have really narrowed to about $2 a barrel, making West Asian grades now more competitive again. In FY25, Russia shipped over $50 billion of crude to India, followed by Iraq at around $27 billion, Saudi Arabia at $20 billion, and UAE at about $13-14 billion. In the first 2 months of FY26, Russia remained ahead at $9.16 billion, but Iraq, Saudi Arabia, and UAE, with much smaller share between $2 to $6 billion worth our crude imports, gained share. Now, industry executives say that refiners prefer heavier West Asian grades to the lighter US crude, and our refinery infrastructure is also already geared for them. So the challenge is price. Bloomberg reports that Saudi Arabia recently raised the prices for the Asian buyers by up to $2.2 a barrel above the benchmark price. And West Asian suppliers, they rarely offer the deep discounts that we earlier got. Private players like Reliance Industries, Naira Energy, along with the state-run refiners are part of this particular shift. And for Naira, it's also about navigating sanctions. Fresh EU measures have really choked crude supplies and also standard shipments. Reports show that Naira has just sent its first diesel cargo to China since the year 2021, a rare move after sanctions really disrupted its traditional trade flows. Analysts say that this shift is as much about hedging geopolitical risk as it is about price and signals that India's oil basket could look very different in the following year. With that, it's a wrap on Two Sharp with ET. I'm Nisha Podar signing off. Thanks so much.